What's up, guys? Welcome back to DCA. Tonight, what we're going to do is continue our macro level analysis of Bitcoin and the cryptocurrency asset class. So what we're going to look at tonight is actually very interesting. We're going to look at the average price of Bitcoin throughout each market cycle. Okay, and the reason we're doing this, let's say you were participating in a random market cycle. Let's say the 2017 cycle. Well, throughout the length of the cycle, there are a range of prices where you could be acquiring Bitcoin. Sure, you could say, let's just look at from the bottom to the top. But, well, let's pretend that you were a participant in the prior cycle as well. And you sold somewhere throughout the cycle and then were waiting to get back into the market. Well, some people may not just hop right back in right at the bottom. They may wait and, acquire at some point in 2016, or they may wait even further and acquire in 2017, or buy in 2016 and then sell the market cycle early and then buy back in. So there are a wide range of prices where individual investors will buy throughout a given market cycle. Okay. In addition to this, many new participants into the market will come in right at the end, the FOMO stages of the market. So at every end of each market cycle, we've sort of seen a FOMO stage. All right. So looking at the average range of prices throughout each individual market cycle will actually reveal something to us that may surprise you. And we're going to look at that tonight. So the way we're going to do this analysis is by starting at the bottom of the market cycle, following it through the top, and then down to the next bottom of the market cycle. So in other words, this area here, this would be one market cycle, and then we would have our next market cycle. The bottom was there, and then so we would go from here to the bottom was there, and then so on and so forth. Okay, so that's how we're going to do this. And for the first market cycle, so we're looking at the time from the middle of 2010, basically through November of 2011. And we're looking at the monthly scale here. We're just going to make it simple. We're going to look at closes. So monthly closes. The first cycle we're going to count as being the middle of July 2010 through the end of 2011. All right. So from this bottom here, all the way through the top and then down to the bottom. And the average price during this market cycle was $3.78. Okay. So if we just plot that on the chart here, we'll see right here, that was the average price. And you can see that this was essentially very close to where the bottom of the market cycle occurred. And so the next cycle then will last from December of 2011 through here, which is our lowest close, January of 2015. Okay, so we'll mark that here, and we're going out to January of 2015. Okay, so the average price during the second market cycle was approximately $247. And now, like we saw the first time, where this essentially formed very close to the very bottom of the market cycle, we're seeing yet again where this average price is forming right around the bottom of the market cycle. Our lowest close was $215. Okay, so not very far off where we saw the bottom of this market cycle. And in fact, we rode right along this line for some time then thereafter, right? And we did the same thing at this price level here. So after hitting at around 378, we rode just above that, and we're looking at a monthly scale here, so about a half a year, right? So far, we've had two market cycles where the average price formed very close to where the bottom of the market cycle occurred, right? Okay, so this brings us to our third market cycle, where the cycle essentially lasted based on our criteria from February of 2015 throughout 2016, 2017, and then reaching a bottom around here in January of 2019. Okay, so from early 2015 through early 2019. And our average price during this cycle was $3,144. Okay, so $3,144 was our average price. And what do we see? Naturally, like we've seen in the first cycle, where this average price forms right near the bottom of the next cycle, same thing in the second market cycle. We see an average price of around $248. And sure enough, that's right around where our bottom forms. And yet again, like clockwork, in this cycle, our average price throughout the market cycle is exactly where the bottom forms after the blow off top that we saw in late 2017. All right. So, we saw this massive drop down. It comes right down to about where the average price was. Then we had a wick in the following month in December of 2018, which went as low as $3,124. So within $20 of our average price, followed by a close right at our average price during the cycle was. Okay, so like we saw back in the 2010, 2011 cycle, as well as the 2011 through 2014 cycles, the average price in our 2017, or basically the 2015 through 2019, early 2019 cycle, the average price is forming right near the bottom of the market cycle. Okay, so finally, with that in mind, that brings up the big question: where is the average price during this market cycle? So there's a few things to keep in mind here before I tell you the number. A, this number is constantly rising, and certainly we aren't, if the market cycle were over, let's say, we aren't near the bottom yet. That we would still have a long way to go, and probably, like we've seen in other market cycles, basically this downturn lasted from December 2013 through January of 2015. This one wasn't quite as long. It lasted from July 2011 all the way through November of 2011. So 6 months. This one was, about a year, just over a year. This one was about from January 2018 all the way through January 2019, so about a year. So if we were to start turning down from here, and I'm not saying we're going to, I'm being hypothetical here, just to illustrate the point of what we're saying. If we started going down, we'd probably have a prolonged period of time where we were heading down. And this average value will be increasing monthly. Okay, so the number I'm about to tell you right now will be constantly rising as time goes on. And nonetheless, that brings up the question, what is the average right now? And the average is $23,430. Okay, so that would put us somewhere right around here. Okay, $23,430 or so. So a few things. Like we said, this will continue to rise likely. All right. Not likely, it will continue to rise unless there were just a catastrophic drop in price that, sends us well below this level. But as we've seen in the past, as we've seen in every market cycle, when, as the market turns down, it has pretty much stopped right around where this average price is. And this isn't just, in my opinion, this isn't coincidental. It's based on the fact that you have people acquiring the asset, like we've said, at a bunch of different time periods throughout the cycle. And not everyone acquires and sells all of their, the asset in any individual market cycle. You get new long-term holders throughout any given cycle. And these long-term holders are going to sort of form levels of support for the coin. So that's, in my opinion, what we're seeing here. There's a few other factors at play, but in my opinion, we are seeing that you have a large number of people buying coins throughout any given cycle. And the reason that we're seeing the bottoms form right near these, average price during any given market cycle is because of the fact that you have these long-term holders, okay, that have acquired at a range of different prices. And due to that range that they've acquired at, on average, they're going to have acquired right, at the average price. So that's why we're getting these levels of support where you're seeing the market cycle sort of bottoms out and then heads up shortly thereafter. And so I'm suspecting that in this cycle, unless something drastically changes, we will likely see the market hit a bottom wherever, very close to wherever the average price is. Okay. So, this is just something to watch for, guys. And remember, right now we're sitting right at $23,430, but this is going to be trending up over time. All right. It's going to be trending up over time. So if the market just goes sideways for a while, it's going to continue to trend up. And, for that reason, I wouldn't doubt if somewhere around 30,000 or, even higher, maybe up to 35,000 could very well be that average price over the next year or so. So if the market did in fact start to head down, that's how you may see this average price trend up over time and lead to a potential level of support for the market, and thus leading to the next market cycle. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.